The crazy week in the global financial markets is coming to an end. The market boost is still going on today, and the currency and stock market is overwhelmed by high volatility. Popular trading instruments are changing their trajectories to polar opposite. Wall Street is eager to recoup losses of yesterday. The macroeconomic data today generate clear-cut signals, and the early rally on Wall Street yesterday was rocked by the closing bell. The benchmark stock indexes went down. The Dow Jones halted its winning streak, and the longest one since 1987. The Dow Jones tumbled by 237 points or 0.67% yesterday. The Nasdaq lost 0.55% and the S&P 500 declined by 0.64% to close at 4,537 points. The major stock indexes looked their wounds for the most part of Friday, trying to regain their footing. Futures on the US stock indexes traded higher in the New York pre-market, and the S&P 500 is expected to trade in the intraday corridor between 4,540 and 4,610 points. Wall Street indexes closed in the red yesterday after the news on the Bank of Japan's meeting. The regulator admits the scenario of an increase in the long-term interest rates. Nikkei periodical reported that the central bank will offer to buy 10-year government bonds at 1% every business day through fixed-rate operations, unless no bids are submitted. The previous rate was 0.5%. The increase in the fixed rate for bond buying pushed yields of 10-year US Treasuries to above 4%, and this took the shine off the US stocks. Previously on Thursday, a report from the Commerce Department showed that the US economy grew faster than expected in the second quarter, with a preliminary GDP figure of 2.4%, higher than the consensus of 1.8%. Strong economic data forced the market to revise the prospects of another Fed's rate hike in September. In the corporate sector, Meta's shares lost some of their gains to close at 4.4%, higher after reporting a surge in the second quarter advertising revenue beating Wall Street's financial targets. Microsoft, which also surpassed estimates for quarterly revenue and earnings on Tuesday, closed down 2.09%. eBay shares slumped by 10.5% after forecasting third quarter earnings. On a Friday, futures for the US stock indexes rose and put Wall Street on the path to a higher close of the week. The catalyst for market optimism is the macroeconomic data. The economic environment today is more than ever happy. The Fed's preferred indicator of inflation and the personal consumption price index declined. The annual rate, which the Fed prefers to evaluate inflation, fell more than expected from 4.6% to 4.1%, the lowest since September 2021, and below the consensus of 4.2%. Core prices, excluding volatile food and energy, inched up by 0.2% on months in June, slower than the 0.3% rise in the prior months, and in line with the market expectations. US personal income rose less than expected. The indicator was 0.3% from a month ago, and the figure is below the 0.5% growth in May and fell short of market expectations for a growth of 0.5%. US personal spending increased by 0.5%, beating market expectations for a 0.4% rise and accelerating from 0.2% in the previous months. Despite rising spending, slowing earnings and inflationary pressures have beyond Wall Street. In the corporate sector, cheap stocks surged in the pre-market trading after Intel posted strong quarterly earnings growth. The chipmakers' results and forecasts point to an improvement in the PC market, with the Intel shares up 7.1% before the opening bell. Nvidia, Micron Technology and Marvell Technology added more than 1% each. Ford Motor fell by 1% after CEO Jim Farley spoke of a slowdown in the growth of unprofitable electric vehicles, reallocation of investment, and for floor increase in the sales of gasoline electric hybrids. ExxonMobil dropped by 0.9% after the oil giant reported a 56% slump in quarterly earnings, while Chevron shed 2.4%. The roller coaster, which has been shaking the currency market since Wednesday, is still going on. Popular currency pairs are sensitive to policy decisions and even hints from central banks. Under such market conditions, the US dollar index shed 0.18% to trade at 101.60. It's likely to trade in the intraday corridor between 101.30 and 101.90. The meetings of the three most influential central banks triggered three sell-offs on forex. Then the currencies rebounded and again came under sudden pressure. The Bank of Japan decided not to change its ultra-loose monetary policy, leaving almost all settings the same. Notably, the regulator made its policy of the yield curve control more flexible. It will be conducted with greater flexibility regarding the upper and lower borders of the range without setting rigid limits. Reversing direction sharply as traders digested the Bank of Japan's decision, the yen gained as much as 1.2% before depreciation by 1%, and the yen has not seen such a large swing between highs and lows of the day against the dollar since the end of April. The US dollar index was determined to climb above the level of 102 points, but the cooling of inflation in the United States spoiled the investment's triumph. Compared to the highly volatile euro, sterling, and the yen, and the Australian dollar and Canadian dollar is showing remarkable resilience. Following a 0.02% uptick, the USD CAD pair is now trading at 1.3225, and the intraday corridor is seen between 1.3190 and 1.3240. The loonie will hardly be affected the surprise decisions of the Bank of Canada. Meanwhile, the loonie finds support from the oil market. Despite a modest decline on a Friday, the prices are set to close with the gains for 5 weeks straight, thanks for supply cuts from OPEC and its allies announced earlier this month. Both oil benchmark rates are on track for a weekly increase of 3.6%. Intraday oil futures were stable, but closer to the opening bell accelerated the down move. Brent fell by 0.6%, WTI dropped by 0.9%. At the same time, the decline in the oil prices for the loonie was smoothed out by temporary weakness in the US dollar. The crypto market is trading mainly flat. Popular tokens remain within their trading ranges, having grown by 0.4%. Bitcoin is now trading at 29,250 points. Top altcoins are wavering between gains and dips. The news environment is still dominated by messages on the regulation of the crypto industry. The U.S. House Financial Services Committee on Thursday introduced a bill to create a federal regulatory framework for stable coins, and the bill requires the Fed to write requirements for the issuance of stable coins while retaining the power of the state regulations. Meanwhile, Binance and its CEO Janjay Penjao filed a motion to dismiss the complaint against the cryptocurrency exchange from the U.S. Commodity Futures Trading Commission, so new developments will follow. As for the intraday outlook for Bitcoin, it has been trapped within the borders of $29,200 to $29,700. If the token is able to surpass and settle above the upper border, the door will be open to the levels above 30,000. On the other hand, to break out to the lower border will push the price down to 28,600. And the only condition is that Bitcoin should leave the range-bound market. So make profits with the InstaForex. Your feedback is appreciated. We wish you profitable trading and have a nice weekend, and see you next week.